Avinash, Bajaj Auto will also be announcing its numbers today. Firstly, let's get in Puneet here to understand what is the street expecting from Bajaj Auto in the third quarter of FY25.
Well, thanks for that. So, it's expected to be a decent quarter for something like a Bajaj Auto. The only aspect is that, the sales has been around 2 to 3% growth, and that's lower than someone like a TVS Motors that's reported a 12% sales growth. So, for Bajaj Auto specifically, it's going to be driven by operating leverage as well as strong cost optimization this particular quarter. Revenue is expected to rise roughly 13%, coming at 13,080 crores. This will be a growth, of course, of 13%. EBITDA is expected to rise 14% to come in at 2,641 crores. This takes the absolute margins at 20.2%, another strong quarter of 20% plus EBITDA margins, and profits are also expected to rise by 12% to come in at 2,167 crores. The company's commentary specifically on the domestic market will be something to watch out for. They also indicated in quarter two that the African markets have started to do well. So a continuation of that is something to be seen, and the export sales have also done well in Q3. So our commentary on that aspect will be also something to watch out for. EBITDA and the commentary on discounting is something that Nuvama expects that the company might speak about. So another aspect to watch out for. So for Bajaj Auto specifically, it's expected to be a decent quarter. And we've seen the numbers for TVS come in as well. It was a good quarter for the company, met in line, almost met all estimates and came in line. So similar thing expected for Bajaj Auto as well.
Right. Well, thank you, Puneet, for that. Avinash, coming to you firstly, how are you looking into TVS numbers? Pretty much in line with the street estimates?
Yeah, I think numbers should be in line. I think if you talk specifically about Bajaj Auto, Somit, I think clearly, as Puneet mentioned, a decent amount of operating leverage and better margins. I think margins have been slightly better because of cost optimization. Most importantly, the volume growth is definitely disappointing, and I think the market should obviously like to know coming quarter, that is January to March, so fourth quarter and the coming year, what's the kind of outlook the management would like to share? Because, looking at the kind of rising inflation, some sort of cutback in consumption, two-wheelers are also to that extent, demand has been impacted. So I think we'll have to see how things move ahead. But any kind of positive surprise in the coming budget could possibly give a big leg up to all the two-wheeler players, including Bajaj Auto. So I think numbers are definitely decent, but the commentary, I think, Somit, is going to be crucial. What kind of outlook on margins and what kind of outlook on the export market? And plus domestic market growth, because volume growth of 2-3% is nothing great to cheer about. I think the markets would obviously like to see double-digit growth, and that is what the management, would be asked. And I mean, the commentary from the management side will be very important to hear.
Right. And what are your first thoughts when it comes to TVS numbers? The stock is up around 6% post the Q3 numbers.
No, I think numbers have been pretty in line. I think, very strong volume numbers, very good profitability numbers. But I think at these levels, Somit, to expect the stock to be a multi-bagger or to give a very big upside is very limited. I think valuations are not cheap. They're fair to expensive. So I think, somebody who's holding on to TVS can definitely continue to hold. Fresh buying is not advisable because, at these levels, very strong alpha, from these levels doesn't look possible. So I think, they operate in a mature industry. And despite, good numbers, I think, the stock appears to be fairly priced. So I think it's a hold from our side.
Right. A hold coming in on TVS Motors from Avinash. Two other counters that have been buzzing in trade is Chola Finance and Bal Krishna Industries. Now, both these counters have seen an upgrade coming in from big foreign brokerages. What is the summary coming in from that? We have Varsha joining us on both these stocks.
Thank you so much. So let me start with a CLSA on Chola Investment, wherein they've upgraded to outperform a target price of 1,450. The upside potential is 23% that we are speaking about. Now they find the current valuation reasonable, and they expect home loan and LAP to see 25% CAGR driven by rising geographical penetration, leading to overall AUM CAGR of almost 19% from FY25 to 27. Barring your medium and heavy commercial vehicles, the brokerage is optimistic about sales growth picking up in all the other segment, and they do not have any concern when it comes to asset quality. Company's loan growth, ROE, and consistent earnings is superior to peers as per CLSA, and they rated best after Bajaj Finance among all the NBFCs. The other counter that is buzzing is Bal Krishna Industries. So Nomura has upgraded to buy from neutral. We are speaking about target price of around 3,242 rupees. According to them, Q3 was in line, although higher other income and lower interest cost led to PAT rising by 42%, and they are poised to benefit from demand recovery that we are seeing. Bal Krishna, if you see, the structural play on steady market gains in global off the highway market, and upside in earnings is expected from second half of FY26, while diversification in OTR is to be pick up pace in FY26, and Nomura finds valuation attractive.